Welcome to today's Business Report. I'm Denise Williams, bringing you the development shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. Scotiabank Canada has announced plans to acquire all outstanding shares of Scotia Group Jamaica that it does not already own, in a move that would see the company become a wholly owned private entity. The proposal forms part of Scotiabank's strategy to improve capital and operational efficiency across its regional operations. The transaction will be carried out through a court-approved scheme of arrangement under Jamaica's Companies Act. A meeting of minority shareholders is expected to be held in the coming months to consider and vote on the proposal. If approved, the deal is expected to be completed in the fourth quarter of this year, subject to court approval and other customary conditions. Following completion of the transaction, Scotia Group Jamaica shares are expected to be delisted from the Jamaica Stock Exchange. Scotiabank says the total cash consideration being offered to minority shareholders is approximately Canadian $500 million. Currently, the share price of Scotiabank on the Toronto Stock Exchange is 117 Canadian dollars, while in Jamaica it trades for the equivalent of 54 cents Canadian. The Realtors Association of Jamaica Multiple Listing Service shows that there was 100 billion Jamaican dollars in property sales in 2025, despite the economic fallout triggered by the impact of Hurricane Melissa. The parishes of St. Andrews, St. Anne, and St. Catherine accounted for $99.3 billion over the period. The multiple listing service data is compiled from transaction reports submitted by approximately 2,000 registered realtors island-wide. The figures do not include direct developer sales or private transactions outside the MLS system. What we are seeing is a dual market dynamic, said Roger Allen, second vice president of the Realtors Association and chair of the MLS committee. He continues, on one hand, we have high volume urban markets. On the other hand, high value tourism driven parishes generating strong returns with fewer transactions. They offered some parish performance highlights for 2025. In St. Andrew, there was 1,727 properties sold, valued at $41.17 billion. St. Anne had $27.36 billion, fueled by strong tourism-related demand. For St. Catherine, $11.71 billion worth of transactions were sold from 700 transactions, reflecting major residential expansion. In Westmoreland, $6.8 billion from just 52 high-value transactions happened. In St. Mary, $3.4 billion worth of real estate was sold. Manchester, $2.3 billion, supported by steady residential activity. And St. Thomas had $96.2 million worth of property sold, which is the weakest performing parish in 2025. For the trading period of June 12, 2026, the most actively traded securities were Ken Tire Holdings Jamaica Limited with 281,303,905 units, representing 91.80% of market sales activity. Trans Jamaica Highway Limited with 7,004,954 units, representing 2.29% of market sales activities. Innovative Energy Group Limited with 5,454,166 units, representing 1.78% of market sales activities. Investor activity remained concentrated in energy, distribution, and transportation plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for June 12, 2026, Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $157.27 and buying at $159.20. For the Canadian dollar, moderate gains supported by $1.50 transaction spreads. The Canadian dollar sold for $114.34 and was bought for $112.78. The British pound had continued volatility, which offered short-term trading opportunities, $6.58 in profits for the banks. The British pound sold for $213.52 and was bought for $206.94. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, in the summer, traveling is what we want to do. And so if you match your credit report, your credit score, and your credit card, then your travel plan becomes real. Every time you go to the supermarket, the gas station, you are now swiping the card to fund your dream vacation. And if you haven't already planned for this year, now you know you can talk to your banker and have that opportunity for 2027. For our funded and focused feature, being a business owner is completely different from being strong in your technical competency. So if you have, for example, a daycare and you give the very best care to your children under your remit, it's not the same as being the business owner. A business owner is a person that does compliance, talks to the bank, makes sure the business is liquid. Now, if you're able to do both, kudos to you. But in this funded and focused feature, we are always going to recommend that you work with somebody who understands business operations so that you can do what you do best, which is deliver the service. And that's today's business report. I'm Denise Williams, bringing clarity to capital, markets, and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.